So get this. Herb retired in 2004, and Gary Kelly became the new CEO. Gary was an accountant by education, and his style leading Southwest Airlines became more focused on finances and less on operations. He did not spend much time on the front lines. He didn't engage frontline employees much. When the CEO doesn't get out in the trenches, then neither do the lower levels of leadership. Gary named another accountant to be chief operating officer. The new COO had little or no operational background. This trickled down through the lower levels of leadership as well. They all disengaged the operation, disengaged the employees, and focused more on return on investment, stock buybacks, and Wall Street. This approach worked for Gary's first 8 years because we were still riding the strong wave that Herb had built. The accountants running Southwest Airlines,
I did not know this part of it.
I mean, they drove up the stock price. They grew the company, but they did not invest in the technology. They were operating with 1990s technology. They were now a large and sophisticated airline, and they were still running on a system that required the people in the field to call in on the phone in order to report their location.
They're not cloud-based either.
I would believe that, right?
They're not
20,000. They have 20,000 employees, 20,000 frontline employees. 20,000 frontline employees have to call in. No automation had been developed to run the sophisticated machine.
Take us back to us, because this does sound like us. Are we set up for a similar collapse? I mean, we already have the IRS teetering. Are we, like, in a possible collapse of our own in this industry?
I guess the question is, what would be the equivalent large-scale disaster in accounting? I guess it would be another Enron. As we talked about in our last episode, a third of audits are significantly deficient to the point where the auditor should not have issued the opinion. They didn't collect enough evidence. And if you think about that, that means like a third of companies are out there with financial statements issued that people are relying on that really probably shouldn't be relied upon, or we don't know if they can be relied upon. It might not just be something like FTX, which is contained to crypto. It might be something that is broader and sets off the next recession.
Even the IRS, their computer system's not up to snuff.
I mean, and you could argue that we're already in a slow-moving version of what's happening at Southwest in accounting when it comes to taxes.
That's my gut instinct.
Because there's still returns that are not being processed. There's all this stuff is snowballing, and it's making working in tax such a painful thing that people are quitting because they say, why would I want to deal with these issues and these angry clients? They're angry at me because of the IRS. I mean, maybe this is why 300,000 accountants quit their jobs in the last 2 years. That's 17% of the U.S. accounting and auditing workforce. 300,000 U.S. accountants and auditors quit their jobs and didn't stay in accounting. 17% of our workforce decided to leave in 2 years. That is an existential threat to the profession. Not only do we have people leaving the profession, college students aren't coming in great enough numbers to replace those who have left. Recruiters who have been luring experienced accountants into new roles say they are often moving into jobs in finance and technology, which accountants are really well suited to because we're numbers people. And technology
not running airlines,
numbers.
but maybe technology.
Numbers and systems people, right?
One thing that caught my eyes, which is nice about articles like this, because usually when there's articles like this, they're only talking to like senior leaders in our profession who are kind of out of touch. And what I loved about this article, they talk to real accounting students. Mm-hmm. And one of the quotes I liked is like, many college students don't want to work in accounting, even those who majored in it, right? And the student, he's at Clemson University, Jordan Pixley, he said he loved the numbers. He loved his accounting classes. And then he started to take on work and he just could not stand the repetitive task, balancing cash sheets. It was just less interesting. And then he basically chose not to apply at KPMG after he was recruited. And now he's looking to do opportunities in the U.S. military. Right. And I'm not like...
Wait, stop there for a second. So, and the reason given in the Wall Street Journal story about why he chose the military instead of KPMG, or why he's looking into the military, is the hours. He is aware that you have to work 70 to 80-hour weeks at the big firms. And he said, quote, "I was a little scared of it, not going to lie. I don't know if I want to do all that," unquote. And so the military is less scary to him than KPMG.
PwC needs to recruit 4,200 entry-level associates for fall 2023. Mm-hmm. And they're starting now to offer internships to sophomores. in college. So basically you take accounting 101 and they offer you an internship for the very next year, essentially. And then not only that, now people are going on to high schools. They're trying to reach people earlier in the funnel, like in high school, to become accountants and come to the firms.
It won't work. And the reason it won't work is because you're not solving the underlying issues that are causing them not to choose a career in accounting, which is the long hours, the low pay, and the boring work as an entry-level associate. So also in this article is a paragraph, a discussion of the pay. And the pay is lower compared to four-year degrees that you can earn in technology and finance. And so why would you major in accounting, have to do a extra year to get your master's and then sit for the CBA exam and make less money than somebody who does 4 years and doesn't have to do an exam or a fifth year? That's kind of basic math to me. And it's a difference of tens of thousands of dollars in terms of tuition, and then more than that in terms of your time. The average accountant coming out of college, it depends on where you're at. But let's say you're in New York City, a high cost of living area. New York City firms now have to disclose pay. And so the Wall Street Journal cites a job posting that has an entry-level tax associate job based in New York City with a range of between $71,000 and $82,000. And if you're elsewhere in the country, that might sound great. But in New York, like, that's not a ton of money to live on. I spotted another article in Bloomberg, another stat. What's the lowest pay U.S. workers would accept for a new job? Actually, David, I'm going to have you guess that. What is the lowest pay U.S. workers would accept for a new job?
I think I saw something like this. It's like $72,000 now.
$74,000.
Okay,
very close.
Okay.
Yeah. So basically, the lower end of the range of that job in New York City is lower than what workers are willing to accept. And that's on average, that Bloomberg stat. That's not in high cost of living areas. So in a high cost of living area like New York City, it's probably even, it's got to be even higher, right? So that's a problem. The pay is low, the hours are long, and the work is not rewarding.